Good morning, bulls and bears, and welcome to your daily morning market commentary. Let's take a look at the key developments across currencies, commodities, and precious metals. The US dollar index slipped below 98.3, hovering near its October lows, as markets increasingly price in continued Federal Reserve easing. Expectations now point to two rate cuts in 2026, reinforced by political pressure to lower borrowing costs. However, the Fed remains divided. Some officials believe policy is already restrictive enough and prefer to pause, while others argue that cooling inflation justifies further easing. Adding to dollar weakness, safe haven flows into precious metals and rising geopolitical tensions, particularly between the US and Venezuela, have weighed on sentiment. The dollar has also underperformed against the Japanese yen after the BOJ's rate hike last week, pushing borrowing costs to their highest levels since 1995. From a technical perspective, the dollar index has shown signs of short term stabilization, but momentum remains weak. Resistance is seen at 98.8, then at 99, while key support rests at 98, with further downside toward 97.87 if that level breaks. Crude oil is trading near $57 per barrel, supported by rising geopolitical risks tied to Venezuela. The interception of a Venezuelan oil tanker and new sanctions against President Maduro's family have reignited concerns about supply disruptions. At the same time, markets are closely watching developments in potential Russia Ukraine peace talks, which could significantly alter global energy supply expectations. However, demand side signals remain weak. US gasoline futures have fallen to a 4 year low, dragging refining margins to their weakest levels since February, a clear sign that end user fuel demand remains soft. With holiday thinned liquidity increasing volatility risks, $54.88 remains a critical support level. Holding above it could open the door to $57.6 and potentially $58.82. But the broader trend remains bearish, and rallies are likely to face renewed selling pressure. A break below 54.88 could expose $53.86. Spot gold continues to shine, trading around $4,435 per ounce after briefly touching a new all time high near $4,442. Rising expectations of Fed rate cuts, combined with heightened geopolitical uncertainty ahead of year end, are driving strong safe haven demand. The broader precious metals complex has also strengthened, reinforcing gold's bullish momentum. From a technical standpoint, gold remains firmly in an uptrend. However, the market is overbought, with the RSI above 70 for an extended period. This suggests a short term consolidation or pullback would be very healthy. Key support lies at $4,316, followed by $4,272, and then $4,250. On the upside, former resistance at $4,381 has now turned into support. A sustained move higher would target $4,450 and potentially $4,500 per ounce. The Australian dollar is holding firm above 0.665 against the US dollar, supported by steady Chinese policy after the PBOC left rates unchanged. Markets are now focused on the upcoming RBA meeting minutes as well as US GDP data for further policy direction. Rising Australian inflation expectations continue to support a slightly hawkish RBA outlook. From a technical perspective, Australian dollar against the US dollar maintains a modest bullish bias. Key resistance lies at 0.6685 and 0.6707. A break above these levels would confirm further upside. On the downside, a move below the 20-day moving average at 0.6602 would increase bearish pressure, potentially exposing 0.6550, and then the psychological level of 0.6500. That's your market overview for today. With liquidity thinning ahead of the holidays, volatility risks remain elevated. So stay disciplined and manage risk carefully. Thank you for watching, and I'll see you in the next update.